Hey, this is Leo, and today we're going to be talking about my plan for the potential AMC squeeze that's coming up, where I'll be taking profits and all that. And of course, this is the same type of strategy that I use on all of my swing trades, so nothing really is different with AMC. So let's go ahead and dive in. So first thing that I want to do, because this is going to be a real world example, I'm going to show my actual account. Well, I'm going to show a screenshot. I've used Paint to remove some sensitive information like the account number and stuff. You can see that AMC stock being hold 5661 shares. So this is a real world example. I want y'all to know that. I'm not just some guy on YouTube making videos. So let's go ahead and dive in. So the first area that I'm going to be looking to take profit would be 387. Now, before you jump in and start saying, "Oh, you're going to screw up the squeeze, blah blah blah, you're a shill, yada yada," let me explain the way that prices actually work in the market. So there's two ways that price will move. So a buyer bids and a seller asks. So, for example, if you have a house, the buyer will bid. Let's say you're selling the house for 100,000. The buyer will bid, let's say, 295,000. Right now, the seller is asking 100, but let's say another buyer comes in and they bid over the ask. Right. So let's say that they're bidding. Let's say they bid 105. Right. So that's going to drive prices up. Okay, so even if, let's say, 1% of all people holding AMC sell at the $400 price range, well, there's still another 99% of those shares that need to be covered. And there's going to be people competing, right? Because they're saying, "Oh, well, there's demand here. I need to get out of these short positions." So what they're going to be doing is the buyer will be buying the ask, driving the price up. So taking a little bit of profit earlier isn't going to screw up the squeeze because there's still all these shares that need to be covered. The other way that markets move is essentially what happens is that you buy up the order book, right? So let's say that you have 1,000 shares that are being that a seller is asking $1,000 for, right? Somebody comes in there, gone, bought them all up, and there's no more liquidity on the book. But people still have to buy. They have to get those shares back. Well, what's going to continue to happen is the price will continue going up and up and up until it finds a point on the order book where there are people willing to sell. So selling a couple of shares, it's not going to affect it. The only way that would screw up the squeeze is and it wouldn't really screw up the squeeze, but if everybody were to close out their positions by 400, right? So they've closed out all their short positions, but that's unlikely because if everybody were willing to take profits up here, that would still force the price higher because you're going to have people fighting to get those shares. So hopefully that makes sense. For example, during a consolidation period in a market, you can have people. So, for example, here where it's chopping sideways, you have time to load up, right? So you're having time to slowly buy into your position. If a trend is ripping like this, you don't have that time. So that's why people are, they're jumping in front of other orders trying to get their fill, essentially. So hopefully that gives you a little better understanding as to how prices move and why taking a little bit of profit will not screw up the ultimate, the MOAS, as people like to refer to it. So let's go ahead and dive in here as far as my trade. So I took a $58,000 original investment, or I bought 561 shares of AMC. Now, the first price I'm going to be taking profit here is 387. Now, my technical analysis that I've done, I believe that it's very likely that this next rip will take us at least to $400. Now, at $400, I believe that they would be forced to close out all of their short positions, forcing us higher. I don't see a situation, especially if they have all these synthetics that people are talking about. I just don't see a situation where they're able to hold that position. Now, the reason that I'm taking it, if I think it's going to go to 400 and I'm taking profit at 287 is because I want to be front running, right? Because if I think a lot of people are going to be taking profits at a certain level, especially a psychological level, so let's say $500, right? I want to be just a little bit in front of that to guarantee that I get a fill, right? Because let's say your ultimate target's up there at $5,000. Well, I don't want to have my markets don't like round numbers. They just don't. So a lot of people, most smart traders that know what they're doing, will end up front running just a little bit. So I usually go a little bit more than that because I want to make sure that I get a fill. Because what you don't want, it's going to make you sick, is if you see it come up there, touch your order, and it will literally touch your order, not fill, and then pull back and never go back to that order. So that's why I like to front run. I like to guarantee my fill. So looking at, let's see, I think it was, nope, not that one. Where is it? There it is. So I'm going to take out 5% of my position, 283 shares at $387, which would be around 109,000. So I've almost doubled my original investment. I've scalped out a portion, right? So now I'm risk neutral. And that's very important whenever you're swing trading. You want to be risk neutral quickly, because that takes away the stress, right? Because now you can't lose any money and you have a little bit of profit locked in. You can take a breath. Everything's fine. You have your profit. You're good. So that's why I believe that scalping out your position is very important. So now after that one, I would take out another 5%, 283 shares at 987 for an additional $279,000 worth of profits. So add those two together, and that's the total profit right now. It's like $388,000. So let's keep going. And you can, this is just an example. Maybe I will move them around a little bit, but it's giving an idea, right? So now at 1897, I'll be taking out 15% of my position, 849 shares at 1897 for a additional profit of 1.6 million. So that's about 2 million if you add in the other 10% that I've taken profit on. All right, so then I'll take another 20% off at $3,000. That'd be 1,132 shares for an additional profit of we'll call it 3.3 million. So then I would be taking off another 25%, 1,415 shares at $4,000 for an additional 5.5 million worth of profit. And so what this is doing, and the reason that what you'll notice is that the percent of my position I'm taking off is getting higher the higher the price goes. And so what that does is that raises my average exit price, right? So I don't want to be taking out 30% of my position here if I strongly believe it's going higher. So, it's beneficial because you're shotgunning your target zone, right? So if I think it's going to go between $1,000 and $5,000, I'm firing a shotgun rather than trying to, hit the bullseye with a blindfold on type of thing. So it gives me a wider spread of where I'm trying to catch the price. Let's see here. Actually, a better example, if you're familiar with like bird hunting, for example, you use a shotgun because it gives you a wider spread. If the bird flying in the air is analogous to the price moving, and you hit it with a shotgun when you're trying to catch it, it's a lot easier than trying to hit it with a pistol or to hit it with a rifle. So that's why I like this approach. So then I would take a final profit, 30%, 1698 shares at $5,000 for an $8.3 million profit. So all in all, the total profit here would be around 19 million before tax, of course. Now, something that I'm going to do during the squeeze is, so for example, let's say it's getting up here to $400 and it is just ripping, right? So what I'm going to do is, if you've seen my trailing stop video, is I will, where is it? Oh, There's Bitcoin. All right, so let's say that you're targeting, $10,000 here on Bitcoin, right? So what I'm going to do, if it's getting really close to my target, been trailing, keeping an eye on the swing lows, right? Because that's how we identify a trend, right? So it makes a high, higher low, high, higher low, and that continues. So I'm keeping an eye on those. We're getting up here. We're real close to my target. So now I'm going to be trailing the candle body lows, right? Candle body low. Okay, well now if I'm looking at my stop and I've got it below this candle body, I've actually captured just a little bit more profit. Okay, there's a new candle body low. Okay, we're well above profit. It's at 14,000 right now. My original target was 10,000. Okay, well, I'm going to zoom in on a smaller time frame. This is on the weekly, and I'm going to be trailing on let's say the daily candle body lows, and just get tighter and tighter and tighter, and try to maximize my take profit there. So that is extremely beneficial. That can, especially with moves that just continue to rip. If it does this, right, and it just goes and just keeps ripping, I'm not going to just automatically close. I'm going to be trailing, keeping an eye on it, managing it. And so these might change. But right now, this gives me an idea of what I'm going into. I have a kind of like a template for where I'm going to be taking profits. And yeah, and once we get above 5,000, between the $5,000 and $10,000 range, that's up there. That's a lot of money. And really, honestly, that's where I start getting nervous. I start worrying about the government stepping in and saying, enough is enough. This is too expensive. The hedge funds have gone broke. The brokers have gone broke. Now it's falling on government shoulders to try and pay for this. We're going to pause it and do a settlement. So I don't want to see it, be up here at $5,000 and I've got $20 million profit, and government comes in. Yeah, you know what? We're closing the doors. It's over. We're going to do a $400 settlement because there's 5 billion synthetics out there and we don't have the money to pay for all that. So, we're going to do a settlement deal for however much. That's a big concern. That'd be sickening to have a $20 million profit and suddenly it goes down to, a couple million. I mean, I'm grateful for making a couple $1 million on a trade, obviously, but, still seeing that go away in an instant it's sickening. So that, this protects me from that to some degree, because here's the thing, we don't know how many synthetics there are. So, if it gets up here to, let's say it goes through $2,000, I've gotten all this filled, I have a $2 million profit, and then they decide to do a settlement once it gets up there around 3,000, for example. Well, you know what? I've already captured $2 million, right? Which is very likely more than what they would be willing to settle for. So like I said, it's a shotgun approach. Anyway, so I think this pretty much covers it. If you have any questions, go ahead and drop them in the comment section below. And like, share, subscribe if you enjoyed the content. Thanks. Bye.